Good afternoon, everybody, or good morning to those in Europe, and welcome to another trading session in the foreign exchange market. Let's see if we'll have a quick look at what happened today during Asia, which wasn't a lot, to be honest, and see if we can find some interesting trade setups again. So we had a little bit of a continuation of the well, look at. I know some people are trying to call this a dollar recovery, but that's rubbish in my view. Look at cable is making new highs, so I think what we're seeing now is a classic cross move. We first of all saw the Canada strengthen sort of significantly, and now we're seeing the sterling follow suit. Prior to that, we had the euro galloping higher, but this is sort of run out of momentum. And what we're seeing is, I believe, just a classic cross move in a broader US dollar fall. Now that is generally a nice market to trade because it gives us plenty of opportunities to trade plenty of different currencies. So let's see what happened on the news front today. Not a lot really. So the first of all, we had a micro move, if you like, in Aussie Kiwi. I don't know, we normally don't start with this little baby, but let's go and have a look at the 30-minute chart in Aussie Kiwi. And we saw a bit of a spike here this morning, sort of just from nowhere, really. Where we moved from, I think we were around 110 the figure, and moved up to about 40, and that was, I believe, to do with an option, a fairly big option trade that was placed in the interbank market, and then they were just covering the delta, if you like, in early Asia, or sort of particularly early Sydney. So that was that little move up there. So it was nothing major. That was just a bit of a flow. And then we had the RBA's Harper came out and made a few comments. First of all, said he wasn't going to be commenting on the level of the Aussie, and secondly, that economic growth is, well, just to paraphrase him, economic growth is too weak to be justifying a rate hike. So that was it for the Aussie, and most of the action was in the cross today. So most of the flows that we saw were in the cross. But looking at the Aussie dollar, I mean, I'd have to say it's holding up pretty well. Now, most of the data we're getting from the banks and from the IMM and what have you tell us that the Aussie is overbought. But for a currency that's overbought, it's not exactly collapsing in a hurry. So suggests to me that the people who are long are comfortable being long, and we may be about to test the bear's resolve on the top side. So let's go back to this this dollar move, like what I believe is happening. So first of all, we had I think it's fair to say that gold and euro led the first wave higher and let's go for the easy for me to say. Let's have a look at the daily chart. So obviously we saw this very, very strong move higher in the euro, and something similar in gold, and other pairs like sterling and particularly sterling seem to lag significantly, and that took euro sterling on this big gallop higher, as everybody's bearish and Brexit and blah blah blah, bearish sterling I mean. And then suddenly they go, oh, okay, well, we're all limit long euro sterling, so what now? So everybody starts getting out again, because that's what we do. And we're heading, it looks inexorably down to test this level here at 89.50, which is the first Fibbo retracement. So I think that's what we're seeing. We see euro and gold galloped higher first, and now we saw the Canada accelerate significantly against the dollar, like dollar CAD. Let's just have a look at that. It's down here somewhere. Dollar CAD fell, as we looked at recently, fell quite aggressively, and now we're seeing sterling playing catch up. So I think this is just typical, typical foreign exchange behavior, foreign exchange market behavior. So and is in my mind aligned with a broader bearish dollar trend. So let's not get too far away from that. So, okay, sorry, I'm hopping around a little bit, but I just wanted to, I think, stress that. So rather than trying to pick pairs that are going to top out against, or are going to bottom out against the dollar, like sort of picking the top in the euro or picking the bottom in dollar yen, what we should be doing is looking for pairs that haven't actually got on the dollar downward trend yet. And I believe that's what's happening in sterling now. So let's start with sterling. As we've looked back on the daily chart or even on the weekly chart, it's pretty clear to me that we had a sort of a base. It just ran out of momentum down here, and now it's trying to decide whether it's going to break up or not. Obviously, this big level here, sort of 134.50, 135 the figure, and that's the next big level. And I believe there's quite a lot of optionality there as well. And that normally means first time up, we're going to run into significant resistance. So it looks like we might be able to pick a short-term top somewhere up here, 134.60. I'm suggesting will be, first serious point of resistance. And on the downside, I would expect support at that breakup point here, 132.50. So that gives us a 200 pip range to trade ahead of the MPC tomorrow. And I think that makes a lot of sense to me. At the moment, we're slightly closer to the lower end. Now let's go on. Okay, remember that level here, 134.50. We're looking at the top side. So let's look at the the 2 hourly chart. Very steep. I mean, very, very steep, but we did break above. This resistance level was around here. Bit of a break, broke down, and then broke properly. So initial support here, 132.80, and below there, that previous high, 132.65. So the way I would trade sterling today is buy a dip to here, 132.80, and if it breaks back below. Well, I guess if it breaks this level, 132.30, then you've got to reassess. So for now, obviously bulls are in charge in sterling, so buy dips. And the first dip, as I just said, 132.80. So let's see what that shapes up as in euro sterling. Let's look at let's look at the daily first. So we were looking at this retracement level down to 89.50, and I suspect we're going to get a test. We're not that far away, so I'd expect we get a test in the next 24 hours before the Bank of England. So do you want to sell here for 40 pips? Look, it doesn't look like a great trade to me. So I prefer to look for a rally to sell. We've had a possible double bottom. I mean, it's stopped twice at the same level, 89.80, so it needs to be respected, and look for spikes back up to this level to sell. So I think for me, euro sterling, play that range, 80, 89, 85, 90, 35. So that's a 50 pip range in euro sterling, and play it with a bearish bias. So if euro sterling does sort of respect this low for now on the hourly, on the hourly chart, and moves back up here to test 90.35, that will probably take cable back down towards that breakup level at 132.70. So I think that's one to watch out for. And in neither euro sterling or cable would I be taking a position at these levels. I just don't see the value in it. If you try and pick a top here in sterling, I suppose you can try, but you'd have to say the odds are probably against you. But you can try and pick a top with a very tight stop, and just looking for as I said, a 30 to 40 point dip. It's a bit like dogs chasing cars, I think. I'm not sure you're going to have a very long career in the FX market doing that, but look, certainly possible. So just to reiterate on that, euro sterling, that support level is the daily 38.2 is at 89.50. So keep that in mind. Initial on the hourly chart, we've got support at 89, let's call it 85, and resistance at 90.35. I would suggest we play that range. That sort of makes sense to me, and the market is most comfortable in a range. So we might only be here for a session, but still you can make quite nice money if you pick up a 50 pip, 40 to 50 pips in euro sterling is very nice. So that's what I'll be looking for there. Similarly in sterling, in cable, buy the dip to well, let's not put an exact point on where that dip is. Keep an eye on euro sterling. So if euro sterling gets to that 90.35 level, have a look and see where cable is then trading. I would hazard a wild guess it'll be down here somewhere. That was the breakup point of the previous high, and then I would suggest buying around there. So always best to, if you're going to buy cable, buy it near the euro sterling resistance level, and similarly if you're going to sell cable, look to sell near the euro sterling support points. It just greatly improves your chances of success. So that's cable. Again, we've got the MPC tomorrow, and the overwhelming expectation is that there will be no change to rates, but there will be a bit of certainly a hawkish leaning towards on the inflation outlook. So that's something to look out for tomorrow. Right, moving swiftly on. Well, let's have a look at everybody's favorite apart from mine, which is the CAD. So we looked at this yesterday, and let's just, before we do the CAD, let's do the sterling CAD, and because this was a nice move yesterday. When we were talking yesterday, and I know some of the guys in the chat room were looking to trade this pair, going into the CPI data, it was down here 159.70, and now we're 200 points higher. So that's a very significant move in sterling Canada. But interesting, I'm going to come back in a few minutes to look at some macro trades that Nomura Bank have issued for the rest of the year, and this is one of them, and they're a seller. They're a seller of this. They think this goes quite a bit lower. So not to say I can't say I agree with them, not the way it's trading. Really, do you want to be selling this pair? Yeah, look, it takes all sorts to make a market. I wouldn't be selling it. I'd prefer to be buying it. But anyway, we will have a look at that Nomura paper in a few minutes. So this is Sterling CAD came down, didn't quite test that big low. We had a spike low to 158.5, and then yesterday we were down towards these lows, or the 158.5, and we were starting to bounce off them. And I think we were sitting in around here if I remember properly. So look at Harry hindsight here. It looks, we should be kicking ourselves. Why didn't we buy? It was an obvious buy. Well, yeah. In hindsight, it was an obvious buy, but look at, we had a very strong downtrend, coming through, down through here. Sorry, I'm just drawing a very, very rough view there, but just showing you the that downtrend. And yeah, then it's, when you see that, then it's not so easy to just jump into a long position. But yeah, it would have been the right thing to do, of course, no doubt. So we had that sharp rally from there. What do you want to do now? Yeah, don't know. Really don't know. Obvious resistance here, 162 the figure, and I guess we just got to wait and see what happens there. If we were to take a position now, I guess you would have to sell. Just based on what this is telling us, as the FX market likes ranges. We had a big move down, retracement, next wave, another retracement, and let's just plot a Fibbo just to see if this is a Fibbo level. So just from here down to here, and no, we have actually broken above, clearly above like a golden Fibbo there at which came in at around 160, and we're trading above that level and have been for quite a while. So that doesn't mean this level here isn't relevant. I think we need to keep an eye on it, but if you start getting hourly closes above 162 the figure, then I think we need to turn bullish again. So that would be my view there. Long term, I'm bullish. I'm cautious, like I said yesterday, because I don't know what the loony's going to do, dollar CAD. It does whatever it can to stuff the most people. So we were looking, if you look on Friday, was it Friday? No, on Monday I think it was, buying here around this 120 level with a stop below 120.60. So that trade's still in place, and the obvious target here is 134.40, which was the that was the breakdown level during the Bank of Canada on last Thursday, and I'm still of the view that was an overreaction to that that rate hike. We were expecting it next month for sure, probably not this month, but does that warrant such a big sell-off? I'm not sure it does. Yeah, the fact that it hasn't rallied faster than this is a worry to me, because normally I would expect, if that's an illogical breakdown, then I would expect that that sort of gap to close quicker. But it is called a loony, and it does its own thing. And I'm not an experienced CAD trader, so I can't really vouch a lot for the moves in the CAD. They just tend to, do what they do, and they do a lot of it overnight when we in Australia here are asleep, so we miss that You know, and there's nothing like watching a market just to get a sense of how it trades under certain conditions, and I think that's very important for everybody to do that. So that's why I don't trade the CAD a lot. Most of its moves happen during New York when I'm asleep, so I don't really see it. So yeah, so dollar CAD, yeah, so we've had a 3-wave up move here on the 4-hourly chart. It has put in a top here, so we've got no, top was here 121.90, and we've got two candles, 2 bars to the right hand side. So that signifies a top has formed, an interim top has formed. The Elliott waivers would probably like us to believe that will now stop there, that you have your 1, 2, 3-wave retracement, and now the dominant bear trend continues and re-establishes itself. Look, possible. I really don't know, but just from my experience in other pairs, I would expect this gap here to close. And until that's done, I'm probably not all that keen to get involved. So that's dollar CAD. Now let's go back up to the top of the list, and we're going to have a look at dollar yen, because we didn't really have a look at that yet. Now I'm short this pair from yesterday. I sold it on the way up at 185, and now yeah, I'm a little bit out of the money. It stopped pretty much at the Fibbo. Let's draw them again just for good order's sake. So this Fibbo here. So we were 114.50, and we made a new low. So that's the significant thing to me. So we made a new low at about 107.35, and we've retraced just on 38.2% of that trace. That's always your first Fibbo. So it's a very relevant level, and I mean, we're around 110, which is a psychological point. It attracts a lot of the you know, the corporates, the Japanese corporates, just from a psychological perspective, will come and stick their offers in at a round number. So I think that's why we've stopped here, and now we need to see what's going to happen. Like I said, I'm short, but if we break clearly above these highs from like earlier at like 110.30, then I'll start to reconsider my position. But like I said, I think we're in a dollar bear trend, and I don't see a lot of risk in being short dollars. Now it may be that we get this risk on phase, which takes, like pairs like sterling yen, like you know, could this break violently higher? Well, of course it could. If that level goes there, 148, yeah, could sterling yen go back to 163? Well, absolutely, in a heartbeat it could, very easily. And so what's going to happen to dollar yen then? Well, it will go higher. Even if cable smashes up to 140, you know, let me just do a quick calculation there. So let's just say, argument's sake, we had sterling yen goes to, I'm just picking numbers here, 162, and cable goes to 140. That would have dollar yen at 115. So yeah, it's certainly possible. So I think that's the one. These are the ones we need to keep an eye on for our dollar yen trades, pairs like this. If that starts to break up, dollar yen will go up. I mean, it just will, just in weight of you know, weight of cross pressure. But for now, you'd have to say top of the range in sterling yen, and we're in a bearish dollar phase, so it's absolutely logical to sell dollar yen, in my certainly in my view anyway. So that's what I'm doing. So I sold yesterday, as I said, at 109.85, so we're pretty much, you know, pretty flat for now, and we watch, and let's just see what happens. I'm just going to throw this on the 2-hourly chart. We had a brief look at it there a second ago, and yeah, look at, again, we're towards the upper end of a range. So 110.60 was the last one. We had a big drop down to you know, 107.40. So we're back towards the upper end of the range. The normal thing to do in foreign exchange markets: sell the top of the range and buy the base of the range. So that's what I'm trying to do. I'm fairly cautious at the moment, but I'm just waiting for some sort of a signal to come and tell me that short dollar yen is the right way to be. I'm not getting that signal now. I think we're just in a wait and see what happens above this level, sort of 110.30. So that's what I'm watching. I think support on the day will be, and I heard there are bids down, yeah, 109.70. So that's the level to watch on the downside. So if you're bullish dollar yen, I think this is where you buy it, 109.70. And if you're bearish, yeah, anything towards sort of 110, sort of 10.30, that's where you sell. And yeah, I'm not haven't got a huge degree of conviction at the moment. I think I just need to watch and wait and see, and hopefully I'll be watching when the break lower comes, which I'm hoping that's the way it'll happen, and then I can sort of accelerate the position as we start to revisit these lows down here in the low 108s. So yeah, as we know in foreign exchange, a lot of our time is spent waiting, and that's what I'll be doing on this one, waiting to see what happens. Now, so in terms of flows, yeah, we look at again. We had the Japanese corporate selling this morning, but that was yeah, and then we had sterling yen. We had sterling yen buying, so the yen sort of in essence was cancelled out, and most of that move came through was visible through higher cable. Okay, so that's dollar yen. Now let's have a look at the euro. Okay, so just to reiterate again what I think is happening here, we've had the very strong up move. Market's gotten itself nicely long. I don't think the asset managers are chasing this, so they will not be seen buying until we get back here. I would imagine down around 117. So I think we've run out of momentum. And what I expect to happen, and is what has started to happen, is that the euro, I'm not saying it's topping out, I don't think it is, I think it's just consolidating sideways, and we're going to see euro top out on the crosses. Now I sold this one today at the ding dong at 132 the figure, or within a pip of the ding dong, and the reason I sold it is this formation we've been looking at, where and literally I think we're just, yeah, okay, we've had a bull move, but I think we're just about to slip into consolidation. So I'm happy to sell up here at 132 the figure, and I'm looking to buy it back. I won't be too greedy. 127.50. How about that? So that's what I'm hoping for. If we start getting strong like momentum on the hourly chart and it breaks above 132, you know, and is impulsive, like it starts making impulsive highs, then I'll just get out. So because look at this uptrend here. I mean, this is pretty strong, so I'm taking a risk in you know, fighting that trend or playing against it, but you know, I'm playing a calculated risk because of that that daily, you know, this the daily consolidation that I think is going to occur. So the market's long euro, we know that. You know, the yen positioning by all accounts is fairly neutral, so yeah, I'm happy to play this one from the cross side, the euro yen, and euro dollar, like I've been saying the last few days, pick a range. I'm pretty sure anything down here is, you know, just praise the Lord and thank you for getting them in down here around 117. But it's going to be toppy for now. Look, we may breach 121 on a news event or something, I don't know, but I would expect, say, 117, 122 for the next 8 to 10 weeks. Bit of a big call, but I just think it's momentum's waning and we're about to start going sideways. So that's my view on euro. So we're right in the middle of that sort of potential range that we've been looking at. I don't see any value really in trading it at the moment. So the uptrend is giving you one sense of you know, feel that you're right, but the lack of momentum will be encouraging the bears. So I think range trade this pair for sure, and just wait to get in at your right levels. So like I said, euro yen, I'm happy to be short. Like I said, dollar yen, I am short. I need to see what happens at 110.30, and initial support 109.70. Let's see what happens when it gets there, and see if we can test that in early London. We had a look at euro sterling, sterling obviously cable. We had a look as well at sterling yen. So we know these big levels back here at 148, and the question is, does this pair just take off and keep going? I'm sort of guessing it doesn't. We know, you know, we've been looking at sterling. We know there's going to be decent selling interest up in the the 134.50, 135. Now that is going to be option protection, so it's not going to be just, you know, putting a cap on it forever. But I suspect it'll stop any sharp rallies. So that might, so those sort of levels sort of tie in with levels up here in sterling yen. I'm happy to sell a rally on this pair and see what happens. That said, you know, any big dips, and I think we should be buying it. So again, range trade. As anybody who makes up their mind on day one of their trading career that they're going to be a range trader and stop looking for big moves, I think will do very, very well for themselves, because that's what this market does most of the time, is range. So that's sterling yen. Yeah, Aussie dollar. I mean, we touched on it earlier. You know, I know the market's long and the market's bullish and da. We had a fairly bearish statement today from the RBA. You know, he's saying again that economic growth is too weak to justify a rate hike, and Aussie goes up 20 pips. So yeah, I mean, whilst I've been saying for the last couple of weeks that, you know, we should be maybe fading rallies, I'm starting to lose that sense, because it's very resilient, very, very resilient. So we accept, well, my positioning here is that we accept the fact that there's a US dollar downtrend, so then we should be looking for buying opportunities in Aussie dollar. And the way this pair is setting up, it just looks like it doesn't want to go down. So what doesn't go down, as we know, goes up. So I think it's definitely worth watching. Now, where can it go? We look at now let's go back a bit further and look at some of these levels. So we've got a weekly high way, way, way back here at 81.70, and I guess that's the next one to pay attention to. This breakup level, this, you know, supports, resist, that band sort of pivot around 77.80 to 78, the figure, this spike low here, and that's becoming a very strong support level now. So yeah, macro wise, you play that range similar to you. Maybe it's going to trade just like euro, 78 the figure, 82 the figure. But for now, the risk looks to be topside. So if you're bearish, maybe just take a holiday, have a day off, and wait and see what happens, because it is looking, yeah, as I said, very resilient. I think that's the word I would use. So that's the Aussie dollar. Let's go and have a look at the old Kiwi. Yeah, again, I mean, everybody's favorite whipping boy. So we've had you know, the euro through the roof. The euro Kiwi, there's a massive move in euro Kiwi. And we'll have a look at that in a second, because we're probably revisiting some important support levels there soon. But this pair, look, it looked like it was gone for all money, didn't it? It was just going to break below. Here, let's have a look in the daily chart, sorry. And it looked like, remember this here last week or the week before, it was going to break below here, and it was gone. You know, it was gone. But no, it's rallied straight back to here again. So almost 73, you know, 73.50. Resilience, I think that's what I would say here. And I'm accepting the fact that we're in the dollar bear trend, so I should be looking for buying opportunities in Kiwi dollar. So look for, maybe the way to trade this, I suspect, because we know the market's short, we know the speculative market is short. So look for big levels in the crosses, like Aussie Kiwi, for instance. Look for something dramatic to happen here. We have a potential double top here. Okay, so it got up to 111.45, and it broke back down below sort of here 110.30. Now we did get a minor break back above, but let's have a look on the 4 hourly, see how it looks. Yeah, so look at, not perfect, but not bad. You know where the resistance levels are here, 110.30, which is pretty close to where we are. So if you're bearish Aussie Kiwi, and if you think the Aussie dollar's resilient and looks okay, then that is screaming at you to buy Kiwi. So where do you want to buy it? So we've had a yeah, I think we're just looking for retracements to buy it. Maybe you pick a moving average, pick a Fibo, pick a trend line. Yeah, it depends what you like. I'd prefer to be buying down here around 72.20. So that would be my ideal. So if, let's say, Aussie Kiwi can revisit those short-term highs at like a little bit higher than here, sort of 20-30 pips, and that Aussie dollar maybe dips back towards 80 the figure, then we might get a good entry possibility in Kiwi. Chances of that happening may be moderately low, but it would give us a good entry level. So I do like that trade. Buy this dip if we get it. Maybe not be too ambitious. and I think I may put that trade up in a few minutes. So I would buy here around 72.40. So I'll do a little bit of calculation, see where the orders are, and I'll put that trade idea up. So before we go, I'm going to just have a brief look at something that Nomura posted early today. So these are 6 trades that they like to look at into the year end. So here we've just got this jobless data again coming out. So in the middle of our pop webcast, and cable is down to 1. Yeah, so what was that support level we were looking at? Yeah, so euro sterling, classic, up to 90 here. So this said we may be getting a sell opportunity. So yeah, if you're bearish and you don't mind ignoring the data, sell here 90.35. That's the level to be selling, and with a tightish stop, and that's going to equate in cable to, we guessed around this level, 132.60, 65, which was the previous high, and that's where the first level we look to buy. So let's just see how that data plays out. But it's playing into our that euro sterling trading idea. So anyway, let me go back to Nomura, and this is their 6 trades into the end of the year. And look, I like these analysts. I find them pretty good. They have some sort of quirky ideas from time to time, but yeah, I like them. Hang on, let me get my ugly head out of the way, and we'll have a look at these trades. So the first one they looked at was a short dollar against the euro and the yen, and I tend to agree with that. So we had that initial big move in the euro, and September, October is often a risk-off period. So all we need is something to happen in the equity markets, and dollar yen will come under immense pressure. So yeah, obviously he's talking my view here. Flying loony, sinking sterling. Very interesting. This is the trade we were talking about a few minutes ago. Now I will scroll down in a second, and we can have a more of an in-depth look at why they're recommending these trades. They like the long Aussie Kiwi, short dollar China, long dollar ZAR. I mean, well, you need to have deep pockets to trade the ZAR, because it just flies all around the place. And yeah, and then the emerging markets trades, which I'm just going to ignore. So this is the Nomura. So yeah, I guess you can read most of this yourself just while I'll post it here, and you can just have a quick scroll down through what they say. But they see structural factors leading to a multi-year decline in the dollar, and this year is the first of that. And while the dollar has fallen sharply this year, this is a typical pattern seen in the early parts of a new trend in the dollar. So this is interesting, and I would tend to agree with them. I think we're entering a significant downward phase in the dollar, and a lot of it's coming from Mr. Trump and just the loss of U.S. power, I guess, and the fact that the Chinas and the Russias of the world are going to see opportunities for themselves to put themselves in the reserve in that whole reserve currency picture. So yeah, this is a long play. It's going to take probably at least another 2 years, and maybe another 4. So it's going to be a long phase. So let's see. So anyway, that's this is Nomura. So they're very much of the and I will try and post this PDF in the chat room if I'm able to post PDFs. Otherwise I may just post a few pictures. So it's interesting just to see how some of these pretty smart analysts, what they're looking for as sort of a medium term trade. So they're looking at a trade that's going to develop over the next sort of 4 months. So that's I find that interesting. So let's just also have a look at the sterling CAD, which is so an interesting one. Now we've seen a big move in sterling CAD, and but now we're seeing that potentially starting to reverse. Now these guys are saying basically that the major trend is down, and it's just going to continue. So I'm just skimming through it here to see. Obviously we've got some risks event tomorrow, particularly with the Bank of England. The CPI and wages, that's all obviously already come out. But for the market to take the MPC's warnings of higher rates seriously, there would need to be more than 2 votes for a hike at the September meeting, or the MPC as a whole would need to set a shorter time frame for when rates might start to rise in the guidance. And look, to be honest, this is not the base case for pretty much any analyst. So really what people are expecting is a sort of a hawkish leaning on inflation. But little more than that. So if they're right, then the market will probably sit down, think about it after the event, and maybe be disappointed. Doesn't get past the fact that the market is already significantly short sterling, and has been, and all because of Brexit. And like I said yesterday, it's one thing to have a major hedge on, to hedge sort of this Brexit event. It's another thing to have that hedge on when it's 5% or 10% out of the money, and I think that's the and Brexit shows no sign of actually coming to a sort of a timely conclusion. So I'm not sure I'd agree with them. In fact, I don't agree with them on this point. I think just the weight of shorts out there in sterling are just going to be too. If they get triggered, let me put it that way, so that if something happens to, whether it be a Brexit thing or a Bank of England thing or whatever it is, whatever sets off those shorts, it's generally what happens. People, the market goes where it's going to hurt the most people, and the most hurt on sterling, I believe, is topside. So I expect cable to take it and sterling to take those stops out. But what happens on the CAD? Does the CAD go back to 1? I don't know. I've like no idea. You'd probably think, oh, that's impossible. It can't go back to 1. Well, look at, I don't know. It just trades gone loony. I think that just sums it up. Anyway, there, as I said, it's a big market. Lots of views, but these guys are smart. I think the Nomura analysts, and it's worth keeping in mind over the next few months that why the reasoning behind what these guys are saying. So all of the recent trends, if you like. I'm going to ignore the bottom two, but the recent trends in euro dollar and dollar yen, sterling CAD and Aussie Kiwi, they're basically saying those trends are dominant and are going to restart over the next, the next period of time and into the end of the year. That those trends are going to become dominant again, so that we're only seeing retracements at the moment. So anyway, very interesting and worth reading these guys, yeah, paying some attention. So Aussie Kiwi looks ready to collapse, somebody in the chat room says, and you may very well be right. So if you've got any questions, please feel free to fire them in the over in the chat room, and otherwise, thanks for your time, and yeah, I'll catch you tomorrow. Cheers, bye.